What if Bitcoin's next big move has already been, well, telegraphed? Today we're breaking down a really fascinating theory from one trader who is convinced the market is following an old script, and if he's right, it could be setting up what might be a massive trade. Let's get into it.
So this really brings us to the core question of this whole breakdown. Are Bitcoin's wild price swings just random noise, or could they be following a detailed script, one that was written during its last major cycle?
You see, the whole idea here is that a very specific repeating pattern has been spotted. It suggests that what we're seeing in the market right now is an almost identical, just slower, version of what we saw back in 2021. And if that's actually true, it could be a huge opportunity for anyone who sees it coming. Now, this is all based on a concept called the market echo. You've probably heard the saying that history doesn't repeat, but it often rhymes. Well, this theory says that sometimes, driven by predictable cycles and, unchanging human emotions like fear and greed, it repeats itself almost note for note. So, to really understand this echo, we first have to get a handle on Bitcoin's fundamental rhythm. And for over a decade now, it has followed this surprisingly consistent 4-year cycle. Let's quickly break down the 4 phases.
Okay, first up, you get the bull market, about a year of just explosive growth. That's followed by the bear market, a much longer period, maybe a year and a half, of prices falling. Then, things start to turn around with a recovery rally, which leads right up to the 4th and final step, the halving. That's the event that cuts the new supply of Bitcoin in half, and historically, it's what kicks this entire cycle off all over again.
All right, so let's jump from the theory to the evidence. We're actually going to put the charts side by side so you can see this market echo in action. We're going to compare the last cycle to what is happening right now.
He's incredibly confident. 99% sure. This level of conviction is part of what makes this whole thing so compelling. He's basically putting his reputation on the line, saying this pattern is way more than just a coincidence.
So, let's look at the parallel here. Back in the 2021 cycle, after hitting an all-time high, the price had this really sharp drop. Then, it staged what looked like a comeback, a deceptive rally that trapped a lot of buyers before it fell even further. Now fast forward to today. We saw that sharp drop from the recent peak, and this whole analysis suggests we are in that exact same deceptive rally at this very moment.
Let's put some hard numbers on that, shall we? The first drop in our current cycle, from the peak to that local bottom, was a pretty painful 38%. That's a serious correction. But here's where it gets really interesting.
Because in the 2021 cycle, that same exact drop was 39%. The similarity is just uncanny. It's honestly the first major piece of evidence that makes you think, maybe we are watching a replay.
So the price drops are almost identical, but the pattern, it actually goes deeper. It's not just about price, it's also about time. Let's see how this all builds into a forecast for where this current rally might finally run out of steam.
Okay, look at the timing here. The first drop in 2021, it took 21 days. This time, 42 days. That is exactly double. Now, the rally that followed in 2021 took 28 days. The one we're in now, 56 days. Again, exactly double. It's like the same pattern is playing out, just in slow motion. Now, why would that be? Well, one theory is that there's just so much more institutional money in the market now, and those big players tend to move a lot more slowly and deliberately.
So here's the really crucial point. If this pattern holds, then this current rally isn't the start of some new push to all-time highs. No, it's what traders call a bull trap. It's a false signal, a final burst of optimism designed to pull in all the last hopeful buyers right before the price turns around and drops hard.
And this analysis even gives us a specific target for where this peak could happen. Based on the last cycle's rally of about 35 to 40% from the bottom, the theory predicts this bull trap will top out somewhere in that zone between $80,000 and $85,000.
All right, so let's say you believe this pattern. How would you actually trade it? Well, this analysis doesn't just give us a prediction. It also lays out a game plan. Let's break down the 2 main ways you could approach this.
So the first option is the safer way to play it. You wait for confirmation. You let the price get into that $80,000 to $85,000 zone, but you don't do anything until you see a clear sign it's turning around, like a big, strong move downwards. The second and much riskier approach is to try and get ahead of the drop. This would mean building small, short positions, which are basically bets that the price will go down as soon as Bitcoin gets into that target zone, all in the hopes of catching the very top.
So we have a theory. This market echo. We've got the evidence. Those crazy similarities in both price and time. and we have a game plan. Which of course brings us all the way back to the big question.
You know, at the end of the day, the key takeaway here isn't just about this one single trade. It's about the whole methodology. It's about seeing how traders use pattern recognition, combining the what of price with the when of time to try and spot an opportunity and predict what the market might do next.
And that leaves us with this final thought. The side-by-side comparison it's really powerful. The math lines up, the story makes sense. But financial markets are absolutely notorious for breaking patterns right when everyone starts to believe in them. So the question remains, is this time different? Or is history about to repeat itself once more?